Assalamualaikum warahmatullahi wabarakatuh. We are from Group 8 of ACC526. Our chosen topic is leasing. Before we start, I would like to introduce my group members. Firstly, myself, Roda Idlin, Azri Hakimi, Nur Fadli Hazika, Nur Azrinas, and Alifah Ilyana. Before we go further into the topic, I would like to start with the definition. Leasing is a crucial financial tool that allows businesses to utilize assets without immediate ownership. According to the Malaysian Institute of Certified Public Accountants, leasing is a contract in which a lessor grants a lease the right to use an asset for a specific period in exchange for payments. But what is its relevance in the current economic landscape? In response to global financial developments, the implementation of MFRS 16 in alignment with IFRS 16 ensures uniformity in international financial reporting. This shift directly impacts businesses, influencing their ability to manage tax burdens, optimize financial strategies, and deduct lease expenses efficiently. As governments refine tax policies to encourage compliance and economic growth, companies must stay informed to adjust their financial planning accordingly. Next, significant in the field of taxation. Leasing taxation plays a vital role in several taxation areas. Firstly, impact on corporate taxation. Businesses must recognize lease liabilities under MFRS 16, reshaping their tax-deductible expenses and taxable profits. Next is international tax compliance. Multinational corporations must navigate various tax jurisdictions while ensuring compliance with IFRS 16 and local regulations. Next is influence on business decisions. Companies need to assess whether to lease or purchase assets, altering corporate tax planning strategies. Lastly is government revenue generation. Tax authorities rely on leasing taxation to prevent tax avoidance and regulate financial disclosures. Next, impact of leasing taxation on stakeholders. Leasing taxation affects businesses, governments, and consumers in different ways. Firstly, business. Financial reporting and compliance. Companies must integrate lease liabilities into balance sheets, altering tax calculations and financial ratios. Next is tax burden. Businesses may face increased taxable income due to reduced lease expense deductions, impacting profitability. Lastly, investment decision. Organizations must evaluate long-term leasing versus asset ownership strategies for financial sustainability. Secondly, it affects government on revenue generation. Governments use leasing taxation to maintain regulatory control and enhance tax collection. Next, policy adjustments. Authorities modify tax frameworks to encourage fair taxation, economic stability, and business compliance. Lastly, international alignment. Leasing taxation policies must be updated to align with IFRS 16, ensuring global transparency in financial reporting. Thirdly, it affects consumers. Firstly, on cost implications, businesses may pass on tax-related costs to consumers, affecting pricing structures for leased goods and services. Lastly, on access to leasing options, stricter regulations may limit flexible leasing solutions, impacting affordability for individuals and small businesses. Next, I'll pass to Alifah Ilyana.
Hi, Assalamualaikum. My name is Nur Alifah Ilyana binti Muhammad Izam. So I will explain about challenges on leasing. So one of the challenges that leases encounter when new lease standards are being implemented is the initial review of contracts to determine lease components. Companies find this burdensome because the task is complex and also beyond the traditional lease agreements to include service and also supply contracts that may have lease agreements. Company must frequently be required to manual review of each agreement to identify whether a contract conveys the right to control the use of an identified asset. This comprehensive review typically requires collaboration between multiple departments, including legal, finance, procurement, and also operations. The process can be challenging for large organizations that occupy a high volume of contracts, legacy system, and also decentralized data. The process making it both resource intensive and also time consuming. Failure to identify leases properly could result in inaccurate financial reporting and also potential non-compliance with the standards. Next, I'll move to the next challenges, which is recognitions of lease liability and also ROU asset. So, at the commencement date of lease, the leases is required to recognize both a lease liability and also the right of use asset on the balance sheet. The lease liability represents the present value of future lease payments that are still unpaid at the date. This payment may include fixed payment, variable payments tied to the index or rate, expected payments under residual value guarantees, and amounts related to the purchase or termination option where applicable. The discount rate used to calculate the present value is either the interest rate implicit in the lease, or if that cannot be determined, the lease's incremental borrowing rate. At the same time, the right of use asset is recognized at cost, which generally includes the amount of the initial lease liability, any lease payment made before the lease starts, initial direct costs such as legal fee and any estimated costs to dismantle or restore the asset as required by the lease agreement. This process ensures that the financial statement reflect both the asset use and also corresponding financial obligation. Next, I will explain about potential future development. So firstly is automation and AI tools to reduce the manual burden of reviewing large volumes of the contracts. Future reform could include the adoptions of advanced automation tools and artificial intelligence, which is AI, to scan and analyze a contract. These technologies can be trained to identify lease components, flag terms that can be controlled over asset, and distinguish between lease and service elements. This will streamline the lease identification process, minimize human error, and significantly reduce the time and resources required, especially for large organizations with decentralized system and also legacy data. Next future developments is standardized digital contract formats and centralized lease management system. So another reform could involve encouraging or mandating the use of standardized digital contract formats and centralized lease management platforms. This will make it easier to track, classify, and manage lease-related data in real time. A centralized system could integrate with the procurement, finance, and legal departments, ensuring consistent data flow and better compliance with the lease accounting standards. This approach will particularly benefit organizations with high volumes of contracts, helping them maintain accurate records and also avoid compliance risks. Okay, lastly, we move to the conclusion. Leasing plays a key role in modern corporate finance and taxation, offering companies a flexible way to access assets without a large upfront cost. Over time, leasing has evolved into complex structure like synthetic and also leverage leases that help business manage cash flow, reduce risk, and also take advantage of tax benefits. By using tools like special purpose vehicles, companies can separate ownership from usage, allowing for tax deductibles payments and shifting on depreciation benefits. However, while this structure can improve financial efficiency, they can also be used to avoid taxes, which has led to tighter regulations like FRS 16, and these standards require most leases to be reported on the balance sheet, improving transparency and also preventing abuse. So the reflections on this topic is learning about leasing is essential for understanding how business manage asset, taxes, and also financial reporting. It highlights the balance between smart financial planning and also ethical responsibility, especially in a regulated environment. So that is the end of our presentation. Thank you for your time and attention.